weekly market update. Despite the Middle East situation, Dubai is safe.
And life is good, but markets aren't. We have a lot of outflows from stocks for the third week back to back. Investors are actually afraid that inflation might skyrocket because of the shock on energy. Can you imagine? The barrel of oil price has increased to go above $100 per barrel. And that's because of the Middle East geopolitical tensions on the Strait of Hormuz. So that is there. And also investors are afraid that interest rates might be delayed to be cut because of the possible rise or spike, rather say, in inflation because of this geopolitical situation. So let's see how that's looking on charts and what we're expecting. All right, everyone, here we are kicking it off with the weekly market updates from the technical side. We can see that NASDAQ on a mid-range time frame is consolidating. All right, and as you can see, as Xylostar research team, we're expecting to continue consolidation, as that's how probability is when market is consolidating. Most likely it continues consolidating. However, when we keep in mind the bigger picture of World War III looming in the horizon and all this geopolitical tension happening here and there, and looking at NASDAQ on a bigger time frame, as I have been highlighting for you guys for the past few weeks, that we do have a lot of bearish indications. Take it as you wish, right? This or that. And we can see on the past few weeks, I've been highlighting for you guys that it is more on the bearish side, and this is exactly what's happening. It's gradually falling as in value, and it is still residing on this solid support on a bigger time frame, and this breaks. Guess when the next target shall be? Probably around here, the levels of 22,000 that I've highlighted for you guys earlier. So that is about NASDAQ. We might see an upcoming crash, the bubble that Michael Burry was speaking about. Yeah, I keep seeing his name every other week. You better know more about the guy. All right, so we can see technically on 4 hours time frame strength in bearish sentiment, as in rejection, right? When a bullish retracement happens to this inner resistance. I'm not going to say that it is the main resistance, because here is the main resistance. And we can see slides of rejections in every impulsive move to the upside. However, recently what we have is a solid engulfing, strong rejection from the upside, solid strong body as in a bearish candle, and market closes on moving to the downside. So there will be some orders placed as in short on this level itself, especially because some people will be expecting a breakout or breakdown, or they say, well, you could say breakout to the downside too. And yeah, so markets with that break, it took liquidity, retraced again to this fair value gap, and from here it went down. But what really is taking the biggest of my attention as in technical factors here is that we have this here, this here, this here, and those and this basically taking my attention as a technical analyst. And I see I'm still on the same outlook, bearish on NASDAQ. So there could be a possibility where this retraces somewhat like that before a break to the downside, or could break directly. Either ways, breakout trades are risky, guys. Be cautious while you are taking decisions on breakout trades. So going into gold. Now, for the past 2 years, aside from the history of mankind, or opposite to the history of mankind, gold is acting very impulsively and sometimes not as rational as it should. So we have a lot of tension happening in the Middle East, caused oil prices to skyrocket, very good trades, very good setups, and caused stocks to go down. Gold, alternatively, should be going up in such times. However, it is not going up, actually. It's consolidating, and it's showing more of strength on the bearish side recently. And it broke below the trend line. We have an engulfing here and multiple solid candles, I would say, to understand bearish sentiment. And there is some sort of, let's say, head and shoulders So there is a very good possibility that gold falls to this support here, right? Technically. Fundamentally, it shouldn't really fall by any means, but technically that is what we're having here. So we could see a continuation, a sharp break to the downside, another attempt, maybe double bottom or an ascending triangle from here, and then we could see it going up, retraces from here. All right, I'm not going to predict every single movement, but that's how it should flow. However, who knows what might happen. All right, be very cautious trading gold because technically it's given a lot of bearish signals. Fundamentally, it's very bullish, and that goes opposite to one direction, and that's when volatility comes into the frame and destroys your account. So unless both fundamentals and technicals are aligned, you wouldn't really want to trade that asset. That's about gold. If we go into a bigger time frame on gold, we can see that there is a very decent space for the trend line, or for gold to go with the trend line. So we have another trend which is like that ascending channel here, which give us possibly the maybe one of two only bullish factors, that we have an inner support here also at this rejection and this level and this channel. So these two reasons could be why gold should continue moving up, possibly creating for us an ascending triangle, breaking out. Either ways, technically, it's still giving a lot more of bearish indications, and there is a decent possibility for it to do something as such. Go to the support, retraces, go to this trend line, and from here it goes up. Again, ascending triangle, that's what gold loves doing. Well, maybe not necessarily this, because yeah, historically we have seen similar stuff, but without a solid retracement to that. So you can see, boom, boom. We can see here that gold didn't necessarily fall to the trend line itself. So that's about gold. Very, very interesting insights, guys. Keep an eye on. We could actually find historical opportunities to come within this week. So keep an eye on both NASDAQ and gold. Very, very interesting. All right, going into Euro USD. So free fall. What had I told you guys? I've been telling you about this free fall again and again for the past 2 weeks. Just sell Euro USD and make a lot of positive trades on your trading career. Of course, none of them were trading advices or financial advices, or all suggestions and analysis, but you could have done it. All right, so crash has happened. It is right now at a solid support. So in order for us to have a better look on the situation and estimation, we see a very solid candle here, right? And with this red candle, we have an unretested resistance here with a fair value gap that is infilled, and we have a solid resistance here. But this candle is pretty strong, I would say. So we could see a continuation to the downside, and in that case, you should be taking a day trade, measuring momentum, trend, and timing, right? So all of these plays into role if you want to go short from exactly the position it is, or you could wait for a retracement. Well, optimally, if it retraces, it should go minimally to somewhere in this level, right? Before which is a higher possibility, continuation and a break below this support to the downside. You guys want to see where this could go. All right, looking at it in a bigger time frame, we can see that there's an unfilled fair value gap here, and we have a solid support here, I'd say. So all around that area, and we have a strong demand here, right? So what we can see is maybe if we get that retracement as we were expecting to this level, right? It continues going there, and from here we could see where that might lead further. All right, well, bearish it is based on so many factors that I can see on the chart, but that would be optimally our first target, and this would optimally be your best entry. So that's about, okay, would be your best entry optimally. Of course, it's not a financial advice, not a recommendation. It's just analysis, but you guys know what to do. All right, that's about Euro USD. Going into Bitcoin. So Bitcoin, very interesting asset. What had I been telling you guys? Yes, despite the war, despite everything, for the past maybe month and a half, I'm just telling you that Bitcoin could be a historical time to enter in Bitcoin. And guess what happened? Boom, it's going up. And guess what? It's not even the beginning, or it's the beginning, but not the end of the movement. It's barely the beginning. So this is about Bitcoin. Before we dive into this, yes, our market research team are expecting that Bitcoin should trace to the upside from here, which is possible because it consolidated and this place reflects somewhat of a demand. However, if we take a step further to the upside, which is happening right now, so as we can see here on a bigger time frame or a bigger picture, that it had reflected to the upside or moved to the upside from this trend line multiple times, and it's respecting this resistance, of course, because it is a solid resistance. So we can see that Bitcoin is forming somewhat of an ascending triangle. So right now the price had reflected to the downside from about slightly above 50% of this ascending wedge, I'd say, or uptrend, and we have a strong bearish sentiment from that resistance. So what Bitcoin is, let's say, more likely to do, which aligns as in technically and also fundamentally, because we are at this looming war situation, which makes perfect sense why crypto shouldn't skyrocket. But BlackRock actually announced that they are adding more than about $500 million into Bitcoin, and that's what caused the price to skyrocket, or one of the main reasons. So because of this bearish sentiment, we might see Bitcoin actually, especially because Bitcoin loves taking liquidity, right? Liquidates that place, goes to this support here at the trend line, and then we could possibly see an attempt to break above this or a break later on. So that's about what we can expect from Bitcoin. Right now, you want to buy, just not right now because we don't have a confirmation. Especially if you go to a bigger time frame, you will see that there is a solid rejection on Bitcoin from that price, which should give us a good indications why it should retrace to the support, which makes perfect sense in alignment with all these bullish engulfings that are stacked at this demand zone. That's about Bitcoin. Going into Nifty 50. Nifty 50 had performed a free fall, as we can see. While the economy isn't doing the best it could be doing, all right, and that's about that. So Nifty 50 has a very, very strong demand zone at this price range, and from here we could see Nifty 50 actually possibly falling further down, reaching to this minor support before a retracement, and then a possible continuation going to this strong demand zone. That's about Nifty 50 for the upcoming week. That's from my side. Now I'd be shifting the mic to Mr. Amedian from London. Hope you're doing good, mate.
Brilliant. Cheers, mate. Here is Abir Amedian, Master of Finance and Investment student in UK and also financial market analyst at Xylostar. Donald Trump, Iran, Middle East is still at the center of attentions. Also, NIO and Adobe released their earnings, plus 6 central banks interest rate decision meetings. Let's have a look. Greetings everyone, welcome back to another weekly market update hosted by Xylostar. It's my pleasure to announce it's been around 2 years. We are consistently working on these updates and the sessions to increase your knowledge and awareness about the financial markets. First of all, as usual, I want to review the last week and let's check what happened to the financial markets from the different aspects of economic side, geopolitics, and also corporate earnings. I want to start our session with the last week updates in the United Kingdom as we received the UK GDP. The UK economy showed modest growth in early, with 2026 real GDP grew by 0.2%, supported mainly by a rebound in production and steady services, while construction continued to struggle. But overall, GDP held steady in January after small gains in the previous months, reflecting a mixed start of the year. From the United States, the US job market remained largely steady in January, with 6.9 million job openings, 5.3 million hires, and 5.1 million separations, showing little change from the December. Quits and layoffs stayed mostly flat, suggesting that workers and employers are holding steady amid a balanced labor market. And also, last week we got the revised number for the GDP in the United States. The US economy grew at annual rate of 0.7% in the fourth quarter of 2025, slowing sharply from 4.4% in the third quarter as consumer spending and investment increased, but were offset by declines in government spending and exports. Worth to be mentioned, price pressures remain steady, with the PCE index up 2.9%, signaling moderate inflation. Overall, the data showed a slower end to the year, with growth concentrated in the private domestic demand. Last week, at the beginning of the week, we got the consumer price index from the United States as well. The US consumer price rose by 0.3% in the February of 2026, slightly above the January increase, with shelter, food, and energy driving the gains. Over the past year, inflation held steady at 2.4%, while core prices, excluding food and energy, increased by 2.5%, showing that price pressures remained moderate but persistent. From the corporate side, or let's say corporate earnings, last week we got the earnings of NIO and Adobe as well. From the NIO, the stock rises after the HSBC upgraded, driven by strong deliveries and EV tech investments. And also for the Adobe, the first quarter earnings beat the expectations, but shares fell as CEO announced resignation, raising the strategic concerns. Last but not least, let's check the geopolitical tensions. The Middle East conflicts remains the dominant geopolitical theme, with ongoing confrontations between Iran, Israel, and the United States, disrupting the global energy markets and shipping routes, including the threats around the Strait of Hormuz, a key oil transit checkpoint. This escalation has pushed the oil price above $100 per barrel and sparked the volatility in equity and safe haven assets as the market is continuously watching the conflicts in the Middle East. Let's have a look to the upcoming week. It's gonna be very surprising as we are gonna get around 5 different central banks updates and their monetary policy statement as well. I want to start first of all with Australia, as the Reserve Bank of Australia is going to release their statement, and also we are going to have the press conference on 17th of March, Tuesday, and later we are going to have the Bank of Canada as well regarding the overnight rate, and also press conference later on 18th of March, which is Wednesday, same as the Bank of Canada. We are going to have the FOMC economic projections, which is the most crucial one of the next week, plus the dot plot. And let's see whether the FOMC members change their views regarding the economic updates or not. And were to be mentioned, the Bank of Japan and also Bank of England and also European Union Central Bank is gonna release their updates regarding their interest rate and also their statements. Stay tuned with Xylostar, and never forget, technical and fundamental can increase your win rate in trading if you combine it together. See you next week.
Thank you for watching us. Stay tuned with Xylostar for fresh drops. Don't forget to like, share, and subscribe.